Africa's mineral wealth has many U.S. companies scrambling to catch up with the rush into Africa. And one such company is the U.S. mining and power generation equipment maker Cummins. Joining us now on the capital equipment sector, as it appears in West Africa, is Toshin Tomori, who's director at Cummins West Africa. Toshin, thanks so much for your time. All right, let's talk about Cummins, who've been active in Africa. Largely, though, operating from South Africa. They've now opened a division in West Africa. What's that all about?
We actually have several divisions in West Africa. I think we have Nigeria, there's Ghana, and then we have partnerships with other companies in the West African market.
All right, so let's talk about what the benefit is in Nigeria, because it's also the largest office now that's been opened outside of South Africa. Obviously, there's a lot of oil and gas extraction that happens within that economy, but there are also manufacturing concerns rising within the real estate and manufacturing side. How are you going to capitalize on those opportunities?
The fundamental need anytime you're trying to grow an economy, you need power. So one of the areas where Cummins can provide solutions is in the power industry or in the power sector, either for small-scale standalone units or turnkey projects, which I think we can make great contributions to a place like Nigeria.
All right, now we do know that for Africa, Cummins sees this as the next big market, and a 4-point growth strategy has been identified. Can you talk us through it?
So in terms of the growth strategy, so we looked at our primary markets. So it's power generation, oil and gas, mining and filtration. So those are the areas where we have the core competency and are focused on. And you kind of tie it back to our vision. So our vision, there are 4 points to our vision. The first being to become a market leader in those segments I talked about. Secondly, which I think is the key to success, is partnering with your customers and actually superior customer service, moving the actual delivery of the service to the customers. You will find most of the aftermarket support with many companies has a stronger base overseas. So where you have a little small operation in the local country, but the key hub will be in either in US or typically the UK. We're moving all of that closer to the African market. Right. So that's kind of the second part.
Okay.
Next is go ahead.
I just wanted to elaborate a little bit more on the sectors you've identified. We do know that there's incredible growth in oil and gas, but you talk about mining and infrastructure. And here we've seen some concerns. If you look at South Africa, for instance, mining output down, despite the prices being high. It has a lot to do with structural factors within the economy and within the need to go deeper into the Earth's surface to mine. Construction's also had its own problems, both commercial projects and also real estate projects. And I'm trying to find out, with some of these subdued elements within these core sectors, how's your business affected?
Well, it is affected, but you have to realize that we don't only operate in South Africa, and we have a very diversified presence or portfolio. So for example, Nigeria, the oil and gas industry is still booming. The mining industry or natural resources in a lot of West African countries have not even been tapped into just yet. So there's still lots of growth opportunity in those areas. So in my mind, I will see South Africa as a staple market or stable market where we know we'll get a 3 to 4% growth every year. But then you look at a place like Nigeria, you look at Angola, Ghana, there's so much more growth in those areas. And I think by diversifying our presence in all those countries, it kind of is like hedging our risks.
All right. Major priority for Africa is developing local manufacturing capacity. In terms of your supply chain networks, what are you going to do to help this particular ambition? How are you going to help to grow manufacturing industries here?
So I think it varies by location. So for example, I'm actually in the process of relocating from South Africa. And the plant I was working with, out of our, say, 50 suppliers, we only had one overseas. But that wasn't how it started. We had more overseas suppliers. And as time went on, we partnered with local companies, helped in the development to actually start to localize our sourcing. Same thing in Nigeria. I think when we first started doing business in Nigeria with our joint venture with Leventis, we mostly imported our gen sets and a lot of the parts or things we used. But as time goes on, now we build the canopies locally. We're actually in the process of going to kitting, where we bring in components for the generators and assemble them here locally. So I think as the environment and the infrastructure supports us, we will continue to increase local content and develop the local supply base.
In terms of value for your investors, obviously, as you're setting up shop, you're also going to spend a lot of money in trying to get the Nigerian operation quite viable. But also in terms of the areas where you invest, you're going to need to bleed cash through CAPEX. At what point are you going to start seeing significant returns?
I mean, we expect to start seeing returns right away, but I think maybe I should take you back a few years. When you look at Cummins as a company, we started investing in China in the 1960s, in India in the 1960s, in China in the 70s, Brazil in the 80s, and we're seeing the returns now. And Cummins is also, I guess, washed with cash, and so we can afford to invest, but I think we expect to start seeing some benefits right away, but of course the returns we expect to grow over time. And by 2020, for example, the target is to have Africa as a $2 billion business for Cummins.